Hey everyone, welcome back to Corporate Decoder, where we decode the secrets hidden in plain sight, and sometimes those secrets are hiding in plain sight. Get ready for a deep dive into Digital Ally Incorporated's latest report that has got us asking what is really going on behind the scenes. Before we dive in, if you love getting the real story behind company filings and want to stay ahead of the curve, make sure you are subscribed. We also have a fantastic Discord community where we break down these reports together. You'll find the link in the description below. Alright, let's get started. Today we're looking at a filing from Digital Ally Incorporated, a company we've talked about before. This report, an 8K, is essentially a way for companies to announce major events that shareholders should know about right away. Think of it as a bulletin board for urgent company news. The big news here revolves around a financing deal, specifically a senior secured convertible note financing. Now, convertible note sounds fancy, but here is the simple version. The company borrowed money, but instead of just paying it back with interest, the lender has the option to turn that debt into ownership, meaning they can get shares of the company's stock. This is a way for companies to raise funds, but it can also mean dilution for existing shareholders if those notes are converted. So, Digital Ally entered into a securities purchase agreement, and they had an initial closing back in September, and then a subsequent closing on the 19th of December 2025. At this second closing, they issued senior secured convertible notes totaling $267,500. Now, they received $250,000 in cash after a 7% discount, which is a common way to structure these deals to make them more attractive to investors. The notes carry an 8% interest rate, which is on the higher side, suggesting the company might be seen as a bit of a riskier borrower. Interestingly, they've also set aside 3% of the gross proceeds in an escrow account. The filing says this is to help with ongoing negotiations with a third party. It is a bit of a grey area, but it could indicate some complex deal making or potential future financial arrangements. Let's talk about that conversion. These notes can be turned into shares of the company's common stock. The price at which they can convert is set at a 10% discount to the average stock price over a 5-day period before the initial closing. This is a pretty standard clause, but it also means that if the stock price goes up, the lenders can convert and potentially make a profit, which could increase the number of shares out there. The notes are also secured by almost all of the company's assets, meaning if the company can't repay the debt, the lenders have a strong claim on its property. Now, let's switch gears to something a bit more shareholder-focused, the annual meeting. This is where shareholders get to vote on important company matters. The meeting happened on the 19th of December 2025, and it looks like about 37.89% of the outstanding shares were represented, which is enough to have a quorum, meaning the meeting is valid. The first proposal was to elect 4 directors. The names that come up are Stanton E. Ross, Leroy C. Ritchie D. Daugherty, and Charles M. Anderson. All of them seem to have been elected with a significant number of 4 votes. This suggests that the current leadership is largely supported by the shareholders who voted. Next up, they asked shareholders to ratify the appointment of Victor Mokwalu CPA PLC as their independent auditors for 2025. This is a standard housekeeping item, and it was approved with a large majority of 4 votes. This proposal is directly related to that financing deal we talked about earlier. Shareholders were asked to approve the transactions covered by the securities purchase agreement, which includes the potential issuance of 20% or more of the company's outstanding shares through the conversion of these convertible notes and the exercise of warrants. This proposal passed, meaning shareholders are on board with this significant dilution potential. This proposal is about another stock purchase agreement, likely related to a different financing or investment. It also involved the potential issuance of 20% or more of the company's outstanding shares. This also passed, suggesting a pattern of shareholder approval for financing structures that could dilute existing stock. Here, shareholders were asked to approve an amendment to the company's stock option and restricted stock plan. This amendment increases the number of shares reserved for issuance by 375,000. This means more stock options could be granted to employees and executives, which again points towards future dilution for shareholders. This proposal also received majority approval. This is often called the say-on, pay vote. Shareholders get to give their opinion on how the company is paying its top executives. It is advisory, meaning the board doesn't have to follow it, but it is a strong signal of shareholder sentiment. This proposal passed with a good number of 4 votes. Finally, shareholders voted on how often they want to have that say. On pay vote, they can choose every year, every 2 years, or every 3 years. The result here was a strong vote for holding the advisory vote every year. This indicates shareholders want to have their say on executive compensation on a regular basis, which is generally seen as a good governance practice. The end of the report lists out the exhibits, which are the actual documents associated with these events. We have the form of the convertible note, the form of the warrant, and the securities purchase agreement itself. These are the pieces of paper that lay out all the nitty-gritty details of these deals. Now, looking at these results more broadly, Digital Ally Incorporated seems to be in a period of significant financing activity. The approvals of Proposals 3 and 4 suggest that shareholders are comfortable with the company, issuing a substantial amount of new stock, which is a double-edged sword. On one hand, it provides the capital needed for operations or growth. On the other hand, it dilutes the ownership stake of existing shareholders. The company's direction seems to be focused on securing funding through debt that can convert to equity, and also through stock-based compensation plans. This can be a risky strategy if the company's performance doesn't improve significantly, as the increased share count could put downward pressure on the stock price. The fact that they're relying on these types of financing with higher interest rates and discounts suggests that traditional equity raises might be more challenging for them right now. A notable risk here is the potential for significant dilution. If all those convertible notes and warrants are exercised, the number of shares outstanding could increase dramatically, impacting the value of each individual share for current investors. However, the approval of these measures by shareholders indicates a level of trust in management's ability to execute their strategy. My take on this is that Digital Ally is navigating a challenging financial landscape. They are actively raising capital, but the terms of these agreements, particularly the convertible notes and warrants, come with significant dilution potential. The annual meeting results show shareholder support for the current directors and for regular votes on executive pay, which are positive governance signals. However, investors need to closely monitor the company's ability to generate sufficient returns to justify the increased share count and higher cost of capital. It will be crucial to see how management utilizes this new capital and whether it translates into tangible business growth and profitability. Alright, that is our breakdown of Digital Ally Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this financing strategy is a smart move or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable and helped you understand what is really going on, hitting that like button really helps us. And of course, subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching, and we'll see you next time.